following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show, and it's good to be back inside today. Tried to do the show from 39-degree weather down in the eastern part of the state last Friday. I hope you guys enjoyed that. It's always interesting to talk about the internals of that. We could talk for a whole week about that, about what goes on, from putting a seed into the ground until the time it actually gets to a producer. There's a lot involved there. There's a lot of handoffs going on, and some of those guys down there really take some risk on at times, and it's amazing, what goes through farmers' minds. And again, one of my good buddies was talking about, the Midwest obviously kind of controls the price, and being at one of those elevators right on site is just amazing to kind of watch what, as Tom would say, shakes off, shakes down, shakes out. Interesting situation, to say the least, and just to get a kind of beat on what's going on with that is for me interesting. So I hope you guys enjoyed that and enjoyed watching me freeze my tail off there. We're going to go right into the notes here. The 10-year. And we, talked last week. Actually, I think it was Wednesday, about on this bar. This is Friday's, or actually this is today's bar. On this bar, on Wednesday or Thursday, I can't remember. We had a hint. This is a really good primer on how to deal with this. We had a hint of a new profile attempting to appear, and that kind of displaced itself and went back from yellow to green before the end of the day. And that basically said, okay, we're not putting a new profile out. So, what does that mean? And if you go into the scanner, I want to get back to my futures section. I was looking around at the XLF earlier. I want to talk about that. But as we go into the 10-year area down here, it's all systems go on the green side. That peel back started happening intraday here on our daily, and it didn't close yellow peel back, so therefore we were green, and therefore we didn't have a new profile output. But that is an indication in itself, just to take some weight off, because we might have a new profile attempt or appearing. But again, that didn't lock in at the end of the day. So that's why it's kind of sometimes difficult really to do automated trading systems and do back testing based on that indicator. So when I go into our breadth charts, if I go into let me go into our S&Ps. If you go into our weekly, we were doing a lot of maintenance on this weekend, shoring things up even more so for you. So there were some weird things going on this weekend. We apologize. I think we put a sign out that was going to happen. So when you go, we cover three things: how many stocks are trading above, inside, and below profiles on our long-term, daily, 4-hour, and 1-hour. But it's difficult to try to track when the indications are happening intraday of new profiles attempting to appear, because they can disappear. And then when you do automated systems and you try to use that as a back testing tool, how can you? That's the difficulty of doing back testing, is you have to, in my opinion, you have to track things on a closing basis, because until it happens and locks in on any indicator, a moving average, anybody who's done some back testing on, the Ninja Traders, the trade stations of the world, you can, a lot of times it will, if you don't do things on the close, you will get false results, and it gets people's hopes up, and that's where you see these sites where people have posted these hypothetical results that look like a 45-degree P&L curve. Run away from those. Don't walk, run. Because a lot of times they'll take best case scenarios in back testing. So if you've got a moving average that you're saying, okay, when the 10-day crosses the 20-day, it will actually get you in on the back testing side when that happens, as it happens, as if it had happened, because it closed down here and went across the 10-day, moving across the 20-day, and it'll say, oh, you should have gotten in on that short up there. All right. But a lot of times they'll bounce around, and intraday they will cross and then move back above. So what if we crossed? Oh, I would have got you in short, but then we closed actually not crossing, and I'm starting to not make sense here. It will actually opt out on the short. So intra-bar, when you get into real-time assessing how the algorithm will work, if you use that method not on a closing basis, you will get completely different untested results, in my opinion. Yeah, the question from RJP is, John, so the peel back disappearing is also an indicator, in this case bullish, in regards to the 10-year. Actually, no. What we were looking at it, and we're not doing any breadth on the 10-year, but when we have, that's a great question, actually. When we have these signs, I'm going to go back to my 10-year, my scanner in the future section and show this. When we have a peel back happening, when we have a green cell and a yellow peel back happening, that's actually something to let you know that, hey, we may have new supply happening. It may be time to start legging out of some of the position on the long side. It doesn't mean go short. And Tom and I talked about this actually on Wednesday. It's not an indication where, hey, it's time to reverse the trade. It's just time to maybe looking at taking some weight off, because if we have this new balanced area, a lot of times those balanced areas will be explored all the way to the bottom of the fair auction. Statistically, I can't give you the number there of how often that happens, but you know, it's just something to be aware of, that we've got a new supply envelope that may be happening, and that may be fully explored, and you may have a chance to re-enter the trade a little lower. You know, I didn't watch the end of that game. So that being said, it's hard to do back testing on peelbacks happening, yellow peelbacks, or new profiles attempting to appear, because sometimes that will disappear. So, and we try to do our back testing on valid information and, you know, things that are concrete. So that's something we're playing around with, but it's a difficult thing to do back testing, but it is an indicator in itself, and I look at it in a big way. So we're going to talk about the S&Ps when we come back. I just wanted to say that about the notes, and the notes really are green across the board, and nothing really standing in the way right now. But as we go back to the S&Ps, we're going to talk about this powerful area down here between 1833 and 1846.47, and what this means. I've been relatively bullish on this, you know, trying to stay within the balanced area, rattling around, but we're going to talk about that when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Here's the, I just wanted to point this out. These beans, man, March beans getting below that 866 area now. Next stop down, 854 on those, in my opinion. And let's go back to the S&Ps here. So, you know, if you've been watching this show, I've basically been, to some degree, ignoring some of the long-term breadth situations that are really, really long-term indicators. Kind of started getting some hints of these crossovers late to mid or mid to late December, and then just first of the year just took off to the races on the short side. That's the daily. If you follow the 60, we've had some decent trading opportunities just following the 60-minute breadth crossover while we've kind of been in no man's land. And when I say no man's land, you know, this fair auction here between 1918 and 1846, 47, relatively wide, got our head above water there above 1918 back last week or the week before, and I got, you know, hey, we broke in stride. This is kind of nice. We could have some more upside, that being 1974, that weekly unfair high, which is again our long-term profile. But now we're coming back down into basically exploring the entire fair auction. There hasn't been a lot to lean on as far as daily profiles until right now. I've talked about maybe this is kind of compressing up against this 1918 again, and that just didn't happen. It didn't develop. We didn't get the breakout. But I've been looking at, you know, shorter-term inflection points to try to pick battles. We picked one off of 1890, a decent one before. But again, you know, this is what stops are for. And right now, we're getting down into a really big DMZ between 1833 rounded off and 1846. So you've got 13 points, in my opinion, to dig in to try to, you know, find a contra trade against that breadth on the, you know, for a bounce. And, you know, a morning like this morning, I mean, it feels heavy. I mean, the market's down. But again, you know, we've come off pretty good here, and it might be a chance to try to, you know, play around with some longs. All stops have to be below 1833 though, if you're going to play around with this. And on a morning like this, I think you should think about trading a little lighter if you're going to try to play around with this morning. But remember, we're getting down into dual inflection points that are pretty serious. We haven't had this happen in a long time. We've got our weekly unfair lows at 1832.33 again, and these daily unfair lows at 1846. So again, we had a move down to recently 1804 on this contract back on January 20th. The long-term breadth has stayed negative since this area here. So when we started crossing some borders on the daily, that long-term breadth has stayed negative. Is it time to just continue shorting? I think this morning you've got zero reasons to short this. You're down into major inflection points that are lining up, confluence, if you will. And if you're going to do something this morning, in my opinion, I think you've got a chance to try to nibble on the futures side. Okay. So what I want to do now is go into something that, I think we've got to pay attention to. When you look at our different ETFs and you look at the breadth situation, this is just ranking them here. We're actually putting in something so you can see inflection points on these ETFs and indices at the same time you're looking at these heat grids. But Albert, yeah, I mean, the thing is again, to answer the question about, what are you supposed to do this morning? Trade a little lighter. Again, I talk about the S&P futures. I talk about notes and bonds and, dollars and things like that. But you always, again, we talk about this so much, and I hate to keep saying it, but, you want to try to get into situations that are going to be as least painful as possible if you're wrong. So that's why I always talk about relative strength trading. I'm, just kind of putting this in the forefront because, in a morning like this morning, why wouldn't you try to find things that are actually showing themselves as not wanting to go down? And we talked about this. We're looking at our ETF sector heat grid, and professionals trade like this. I mean, they look at sectors, they look at different. A lot of these portfolio managers use the futures market to hedge, and they definitely put money to work quickly by going into the futures market if they want to get a jump on things. But a lot of them will look at sectors, look at rotation, look at what's kind of the flavor of the week or the month or whatever, and they'll try to trade those notions. And what's happening or been happening that we've been talking about is one of the seller dwellers here is the financials, and financials aren't going to like those lower rates in general. So we've been looking at the utilities. So, I mean, these are the type of sectors they could snap back and just do a massive reversal. And that's great for some people that like to play that game. But the boring trade and the good trade has really been to look at, what's been showing its hand, what's still, and I'm going to look at the utilities here, what's been the opportunities based on some of the things that we've been looking at in the utilities. I've done a lot of videos on this lately. And again, I mean, if it ain't broke, don't fix it. Again, if the market goes down, it could drag some of these stocks with it. But I mean, you've got some decent plays here. I could pick out a few of them for you. I mean, just by looking at the grid. DTE. I mean, look at these things. I mean, you've got support areas. I mean, the market's down. A lot of these, you'll see how they open. And you've got some inflection points to lean on. If you're wrong, you're wrong. I mean, that's the way it goes. But these are relatively high probability situations. If you go into the energy sector still, let's take a look at crude oil. And again, we're trying to find opportunities on mornings like this. Crude oil is kind of sunk back down into this 29.26 area, which I think is kind of cool. I'd like to, you want to say it stay away from these areas, but you've got another chance here. We've reached a low this morning, 29.57. We reached a low the other morning of 29.40. So, we bounced a little bit off this general area, but, can you find some opportunities to trade crude oil? And when the market's down, you can go into this energy sector. You can go into this energy sector. And, again, I think we talked about the gang of five. Some of these are still just off the charts cool. There's that RRC, bucking the trend of crude oil. If crude oil breaks that area of 29.26, you could have some people giving up on this for a little bit, and by all means, the trend is still down on this, but you've got some opportunities that you may be able to take advantage of, looking at sectors relative to what's going on with the market this morning, and kind of finding out what's showing its hand. If I go in here and I go into the utilities again, and I say, hey, let me see what's pre-market. As soon as we start getting some ideas this morning about how stocks are opening, I want to see what's kind of hanging in here on the 60 and the 240. I can sort it like that. Guys, I hear the music. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Here's that XLF situation. This is our long-term weekly. Talked about there's no way in heck to even think about going long this until we get back above 21.93. That's still the case. We're down this morning. 20.65 looks like pre-market. May have some new inflection points to lean on down here on the XLF, but again, in my opinion, you've got better longs. Even if, excuse me, guys, get the chart back up here. I'm sorry, even if you've got a situation where the notes kind of reverse, I still think you've got better longs to think about other than the financials. I mean, they've just things on the lows go lower, and you've got better things to pay attention to. All right, let's hit gold, because this has been the something I've totally missed this on. Here's the situation on the daily. Somebody on this network has been very correct about gold. I'm not going to name any names. And as we go into our futures section, again, we looked at this Friday. It's kind of green across the board. No indications, no reasons to take off your longs if you're long. And if you look at this, I'm going to pull up our chart here. If you look at this, until we have any indications, yellow peel back, anything like that, and any breakage of these, I like to use the 240s, and I'm going to show this. I'm going to pull this up. I like to use the 240s to kind of regulate situations like this on the long term, as we've, on a weekly kind of closed above and just kind of continue to move north. I'd like to see, at bare minimum, a new profile in the weekly, and then starting to break some rules here. If you notice how this kind of operates and works, if you go back in time and kind of as we got above that 1104 and started breaching some areas at the same time on our lower term time frames, there's 1105. We kind of use these to regulate the trade up. There's the support, there's the breakout, there's there's support again last week. Right now, there's just not a lot of reasons to take the trade off if you've been long. And I will admit I've completely missed this long trade, but I haven't been short. And this is kind of a really good thing that keeps me out of trouble. I'll just state this. Looking at the way that we look at things on this show, it's kind of brutally simple. I mean, I use profiles on different time frames, and what it does for me is it blocks out one side of the marketplace. So in this instance, it has completely blocked out the short side, and I don't have to, sit there and punch myself in the face being mad at myself for going short. So it's eliminated that altogether. And if you look at this, and again, I you guys watch this show, I haven't been a massive, proponent of gold going straight up. But in this type of situation, when we started closing above 1104, and we had no indications whatsoever relative to profiles to go short, it's at least blocked out the short side. It's not saying, hey, I got a gun to your head, you got to go long. It's saying it's okay to be long and not okay to be short, if that makes sense. That's why the S&P is going back to those. It's been nerve-wracking for a lot of folks, and I've not been immune to that. But all we've done is stay within the balanced area on the weekly and daily, and I haven't had a lot of direction. I actually kind of bought that breakout in the retest and then got stopped out as it came back down below. But right now, again, you're in a little bit of a mixed bag. I think you've got to take advantage of some volatility this morning between that 1832 and 1846 if you're just catching this show today. But going back to gold, this is just a prime example of okay to be long, not okay to be short, and no hints of changing that tone. So again, it's kind of made it real black and white for me, blocked out the short side. Nobody cares about that. All right. So we're going to take a look at the XLE really quick. Okay, so this morning looks like we're printing 54.61. All right, so keeping that in mind, I still think the XLE is acting relatively stronger than crude oil in general, but we're kind of getting, not on this particular inflection point, 54.13. Every time I do that, I think of David White. I'm I'm walking around in the mall and I go, yeah, and I think of David White. I love it when he does that. So the XLE is acting relatively stronger, in my opinion, than crude oil in general. You've also got a decent little floor down here on the weekly on the XLE that you don't have on crude oil. So between 52.69 and 54.13, I know that's a pretty big range. You've got kind of a collection area to kind of play around with crude oil, but you've got to keep your eye on crude in general. And again, if you're going to play the oil scenario, you've got to, in my opinion, be willing to maybe mitigate some risk and go into some of these oil stocks that are strong. And I sound like a broken record, but I mean, you know, I can't keep telling you over and over again, you know, if somebody, what is Larry or Basil? I forgot who said this. You know, I think it was Larry. A smart man learns from his mistakes. A wise man learns from others' mistakes. Learn from others' mistakes in this case. Try to find the trades that are relatively boring and are showing themselves early. And being a cowboy and playing around with fire sometimes, like shorting Amazon at blah blah blah, and trying to buy GoPro. Those are scenarios that a lot of smart traders don't get involved with. So this is, again, trying to keep this relatively boring and simple. All righty, let's look at the dollar. A little bit of a move this morning. God, man, I mean, this one completely astounded me. Again, breaking below 98. We talked about 98, 98.30. That was, you know, okay to be long, not okay to be short. Until we started getting below there, then all bets are off. It's not okay to be long again. So right now, what have we done? We've rallied back up into a new profile that's above price action that had already locked in this morning, and you've got a new little situation to lean on here, not little, 97.60. All right, we've hit that 97.50. We've been in that neighborhood. I'm going to call that kind of satisfied. But in my opinion, the dollar could rattle around down here now that we've kind of broken down technically. And you can orient stops above that 97.60 area. Just kind of see if this thing might want to fall apart a little bit after a pretty big move up this morning. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Joe, I'm sorry, I did the wrong thing. Okay. Yeah. All right. So one of the questions looks like in the den, what do you do? What do you do on the on a morning like this? Obviously, we've talked about playing around with those futures between 1832 and 1846, or 1833 and 1846. You got about a 13-point range there. Getting a little bit of a bounce off of that right now, but you can always go into the scanner and just try to find things that are trading above profiles on the weekly and daily, and kind of look at those things that are kind of sitting on those inflection points and see how they open, see how they act. I mean, you've got, again, I hate to beat a dead horse, but some of these energy stocks, the real clarifier here would be to oil's trading down, the market's trading down. Try to find some of these oil stocks that are just still kind of raising their hand going, hey, thank God nobody's selling me. And if the market does turn around, some of these things could pop significantly. Here's one. Again, I'm just using the scanner, just things that are kind of hanging in there and showing their hand. You've got some things to lean on. Let me see how Philip Morris is opening this morning. Yeah, really not opening bad at all. Again, this is Philip Morris, just kind of has compressed up against this particular inflection point, 89.34. Again, this is not the internet's du jour stock of the world right now. It's going to be relatively simple to trade, in my opinion. But again, times like this, boring may be good. Let's take a look at Verizon really quick. And this is something. I think we had a call about this last week. Let's see if we're opening this morning. Yeah, we're printing this morning already. Again, showing itself to still be strong. I don't like how we've got a little bit of a lid right there on Verizon right now, so I'd probably opt out on this. And again, I chose things that are sitting at the top on this time frame. There's some things that have kind of pulled back into Clorox Southern Company. This might not be the best play. But looking at this on a daily and a weekly, you're trading above profiles. You kind of pulled back sympathetically with the market, had a decent close on Friday. It's not printing this morning yet, I don't think. Let me see. Yeah, it is. Clorox, believe it or not, in a defined uptrend, it's kind of trailed down right to the bottom of a profile on our daily. And I'm just specifically looking at stocks because, again, we're trying to increase our odds on a morning like this, trying to find things that are already saying, hey, I don't want to go down. These are the ones that kind of could just theoretically lift easily. So Clorox is a decent little play here. And I'm going to go here to neutral and bottom. Let's just pick out some arrows up here and look at bottoms. Actually, it'd be better to probably look at tops here. Okay. So let's just look at RAI, Reynolds American. All right, so this is the situation on Reynolds American. You got an unfair high on a weekly, 47.59. You kind of got one at 47.52, 53 on the daily. You've had a decent pullback here. There's no mystery about that this morning. Let's see, we're printing where. Below 46.75. Well, let's see here. Yeah. It's printing a little bit too low this morning to kind of look at that as one of our stellar situations. I'm just looking across the grid here. Let's go back into this again. Let's look at Procter & Gamble really quick. This is, again, I'm looking at this, two weeks above weekly unfair highs and then coming back into a daily unfair high for support. Let's just see how it's opening this morning. Not bad. Not bad. Remember, this is kind of the anti-stock. When the market's down, I mean, people flood into this. Okay, man, I love this. Got big-time support, 79.78 on PG, up into 80.91. You got a little bit of a DMZ there. This is something I know it's kind of had a heck of a rally lately, but this is something you could play around with on a morning like today and maybe get a pop in it. All righty. All right, so let's drill also into the industrials really quick. And we should have some things printing already that the scanner's catching. Let's look at PH, Parker, and Niflin. All right, let's see here. Okay, so this is one that's kind of interesting. Weekly unfair highs around 100. That's a big whole number. Kind of eclipsed that last week. Let's see where we're at this morning. Not printing yet this morning. Again, kind of broke stride, has really kind of showed itself now with that close above a profile. You could, a lot of times these things will retrace back into. You got a really good psychological number of 100. We got back above. You could probably use that as something to lean on and buy support on a morning like this, and maybe this will be something to take advantage of. Raytheon, we're going to take a look at this one. I love how this is acting, actually. Let's see if we've opened this morning. Not yet. RTN, we're going to see how that opens. Something to put on the radar screen. Let's take a look at a couple more industrials. A sector that's not, just been getting hit too bad. Got some decent shining lights here. Okay, Cummings, let's take a look at CMI. This has been something that, has been in a defined downtrend for a long time, but I like how this really acted last week, and you got some 94.40 support on this right now. Let's just see if we've got a print this morning. No, not yet. I like how this has got back into the balanced area. We could explore the whole thing. You've got some support here depending on how it opens at 94.40 on CMI. Let's take a look at Boeing. This is probably not one to play around with still. In my opinion, you've got, and again, I think we're printing already, yeah. You've got, see how this is opening kind of bad. You've got better longs out there that are going to show themselves pretty early. And if I go back to my dashboard and I look at my 60-minute really quick, hopefully on the opening you can find some of these 1s and 2s and things like that. Let's see what's been looking like it's been turning here. NDAQ, let's take a look at that one. NASDAQ OMX Group. There's the weekly, there's the daily. How is it open this morning? Not open yet. Closed really, really good on Friday. Let's see here. That's the day. Yeah. I don't like to lean on there, but again, got to buy the strong of the strong on a morning like this. Let's take a look at Amazon when we come back. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're going to look at Amazon, but what I was doing is, kind of a scarier trade, if you will. I hope my scanner's still showing. What I did is on the scanner, these are ones that you want to, and we're showing pre-market activity on the scanner now, which is kind of cool. I just put in below, and then above. So I wanted to see what the stocks in the S&P 500 that have been getting just kicked in the butt here hard on all time frames, but started showing some green shoots here on their very, very low, shortest time frame, 60-minute. So one of the things that came up was DLPH, Delphi Automotive. So then I went into, daggone it. Sorry about this, guys. I went into, it's not open this morning, had a pretty big move on the close. DLPH, again, something that, this is not the, the best thing in the world you can get your hands on to buy right now. Here's our daily. But here's that 60-minute thing that it flagged. So, not open this morning, but just kind of just had a weird move on the close. Pretty, what is that? A point move in the last 60 minutes straight north. If you want to play around with things like that, the scanner's going to kind of put them on your radar screen. So just if you want to be terrified all day long, you can find things like that. Here's the ones that were just showing extreme strength as of Friday's close. A lot of them hadn't opened this morning, but I just picked green across the board. I can do this too. I can go in here and pick neutral, neutral. And I can look and see, and I can sort them by numbers and arrows up and things like that. Arrows up mean in a defined uptrend still. Let's look at NextEra Energy. Again, really been bucking the trend down here lately. Here's NextEra Energy. And again, utilities. Here's, are we open this morning? No, we're not open yet. But again, don't really have a lot to lean on the daily there, but 240 regulating the trade up again, still looking good, hasn't broken down. Let's take a look at Amazon. And I want to show you in the scanner really quick. I'm going to reset sorting here, and I'm going to go down to AMZN. There it is, somewhere down there. There it is. Okay, so this is a situation, you haven't had any green shoots happening here on this in a while, all right? And it's red across the board. Here's where we kind of are pre-market here. As you can see, there's just not a lot of reasons to buy this particular stock, even though you could get a big snapback. I mean, I think, again, you want to, been talking about this all morning, try to make this boring and try to find the stocks that are just already raising their hand as not wanting to open down. So, again, red across the board. We're going to take a look at the charts here. Here's a long term. Here's our weekly, and just had some massive volatility after we broke down below the profile, went back and over retested it, in my opinion. But what do you do with this now? Here's our 240. Still a very ugly situation. That is, nothing in my book that could really be bought right now. We're going to take a look at IBM really quick on the close. Looks like this morning we are opening like 125.96. So IBM's probably going to have a new profile output today. That's what that means. That yellow bar is a Friday. This is not incorporating today's price. This is our weekly. This is our daily. Looks like it's gapping down pretty significantly. We talked about just kind of continuing to try to stay short this. Gotta hear the music. Larry's next. Stay tuned. Then Basil. You got Steve Rhodes, David White, Daryl Martin, Tom O'Brien, of course. And Andy Hecht will be on tomorrow, so that covers all of them, I think. We'll be right back tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.